Good evening. This is the Elliott wave update for the S&P 500 for Thursday, April 21st, 2022. It was an interesting day. It was a great trading day. It was not the most difficult trading day. In fact, it was more on the easy side because direction was fairly clear, and the direction was fairly clear fairly early. In any case, let's dive in. Let's see what's going on. I'm going to start again on the daily chart, even though there's more to detail on the hourly and on down. Just to say that nothing really is changing on the larger scale, although we did get I think our first support or confirmation that the minor wave 2 is complete, and now we're beginning to drop in that minor third wave, which in and of itself will subdivide more than once. So we have a lot to anticipate and unpack if this is actually what's happening. So nothing to change on the hourly chart. We have intermediate wave 1, intermediate wave 2. We are in a minor or an intermediate wave 3 decline, which consists of 5 waves of minor degree. And we may have just turned the corner on minor wave 2 and begun to drop, and that may continue precipitously into next week, which says a lot to what Elliott's suggesting could be coming from earnings reports. Things seem to be not as on steady ground as one would think if a particular side was in control, if the money was controlling the buy side versus the money controlling the sell side. So in essence, it's becoming, with you want to put your money in, fine, boom. You can have ours, we're going to take yours and sell you this market, and then, but we're going to keep selling. And that's really what happened today. So I'm going to go down to that hourly chart and see if I can open it up a little bit. This is today. So here we have, this is all of minor wave 2. So it did complete, and it was tight, but it was very C wave-ish, and that was great. So it ended up being an A, B, C, B, and then a 1, 2, 3, 4, 5, 3, 4, 5. And that was the C wave. So off we go. And that C wave was finishing today on the opening at 45.09. And as we discussed, we had the potential to go all the way up to 4,600, but I was expecting at least an attempt to get to that 50%, in between 50% and 618 of a retracement level. And it did. And it went right off of it just as quickly as it went up and touched it. And the very next bar, you can see it got, and it just blasted lower. And that was it, seller, 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 seller. And now you can also see on the hourly chart what happens when they break the 8, a little bit stronger. The 20 goes through it, rallies back above it, and then slams through it, breaking the 50. Goes back, gives it a test, slams through it, goes through the 200, goes back up, gives it a test, and just then sells off into the close. So indeed, very much third wave like. But now I got to give you the other side. And here's the other side, because we're heading into, after tomorrow's expiration, which could be a down expiration, we are heading into more earnings next week of the tech titans, of Apple, Amazon, Facebook, Google, Microsoft. NVIDIA's out into May. Tesla's already done. Twitter, I think, is May. So we have the big titans coming out and telling us how things are going. Again, I don't know. I'm not looking into the crystal ball, but there is a count that would suggest that we kind of are in a B wave, and this B wave is farting around. Maybe we go up a little bit, maybe we come back down, finish lower, and then go back up again. And that would come in the form of an ABC, and this whole wave 2 is not over yet, the minor wave 2. And this ABC up was only a wave A. All kinds of possibilities depending on how macro you want to come. So I'm leaving it that minor 2 is complete and we're dropping in the minor 3. And I'm leaning towards that because of the way it broke the moving averages, the way the moving averages are now lining up. The 50 will cross the 200 on any additional selling below, where did we reach? Below 43.80. It's going to pull that 50 down and bring it across the 200, and that'll open some doors, technically speaking. Now, what could be happening? If we're counting into the third, this is all, again, the hourly. We didn't have any. They were internalized, so they were within the hour, like within this and then that hour, but the overall trend was down. That's why I'm telling you trading was easy. Because when you recognize that we are going down, you're already gearing into your mindset, into your mind, that the larger moves, the larger slides, the larger price action is going to come to the downside. So it's making adjustments, but that's the direction it's going into. And it just really kept right up. And we saw complete turns in the Dow being up 350 points to being down 368. From the NASDAQ being up 280 to being down 280. Those are 360 turns. And being that tomorrow's expiration, those turns put many of the bigger or the higher weighted stocks in both the S&P and the NASDAQ into turmoil because they're sliding through strikes going down. When we walked through the doors this morning with Tesla's great earnings, traders were heading for 1070 to 1100. That's where they were going, and that's what they were figuring would follow through for tomorrow. And then they got an abrupt about face, and it went from like 1080, I believe, whatever the high was, back down to dipping below 1,000 to come back up. And now they're fighting to keep it above 1,000. And I don't know, maybe that's the level they want for tomorrow. So there's a lot of things at play that are nothing to do with anything about the stock. It has to do with the price and where options match up and go off into option never land. They settle out and then that's it. And we move on. So there are plays and they're going to be surrounding expiration. And quite honestly, as an options trader, there are a lot of plays to do because you have options expiring tomorrow and then you have volatility. And volatility will be strong. Volatility in some stocks, as a friend pointed out to me today in the stock Snap, where the options that expire tomorrow are trading close to 600 vol. 600. There are plays to have, option traders. I'm just letting you know. And intense babysitting, not really needed. So in any case, tomorrow, we are, at least basis the hourly chart, oversold. So I would expect a bounce. How severe can that bounce be? Depends on how and which stocks are going to be moving. And since we know Apple, Amazon, Facebook, Google, Microsoft are going to be moving, Tesla will be moving. They all will go. Twitter, they're all in play. So we have 4401. So we go back there, that'd be minor. Then we have 4419, 4420. That is where the 8 moving average is. This is the hourly level. Then we have the mighty 200, which if it remains flat should be resistance. And that's at 44.45. So they can, from here, push it up that high. If we revert and go down and create new lows, it changes the levels to which a bounce would occur. Now, I am saying, yes, we do need to bounce. The market needs to relieve some of this getting push lower. If you're a short seller or a short player, you want it. So a lot goes into what's happening, but it doesn't mean that the market is overall today, tomorrow, and the next forever going to turn bearish. Could very well be another intense down day. It's a lot of shifting of money, a lot of shifting of positions. That's what happens on expiration. So a lot of things go off the board. A lot of things are done. There's into cash, and the cash is getting somewhere else. So I do think we need to bounce in, but after that bounce, I would anticipate that we're going to start to fall lower again. Now, what I can do is go back out to that daily chart and put on some, if this is indeed the completion point for minor 2, where can we expect minor 3 to end up? We just use Fibonacci extensions on that. We go from the top of wave 1 to the bottom of wave 1 to the top of wave 2. And this would let us know. I'm going to slip back down to that hourly chart. And you can see that we've already gotten nearly back down to the 50% retracement, which is 43.69. That would be a 50% retracement back off of this wave 2. And as compared to wave 1. Now, where do I think this third wave can end? The minor third wave. Down here, 40.55 in that hood, because it is a third wave, because it is often the longest and the strongest, because these are the guidelines. This is what we carry forward. That's what we're looking for. So how, you're going to get continued confirmation because it's going to move. So if we do another 50% tomorrow, we're down to 42.28. So then we're even closer. Yes, there will be bounces. I'm telling you right now, I expect bounces. That's what I'm looking for before we head more strongly down. Because today we dropped over 100, high to low. We dropped over 100 intraday. We started out high, excuse me. So it didn't feel as much if you're watching point for point. But if you took it from where we were, it was a severe down day as a trader. That's a lot of strike prices option-wise, a lot changes. And so we're in a volatile period. And in actuality, as traders of the future, we are cash traders. That's what we do because it settles into cash. You got it in your account. This is what the trade was worth. Boom, it changes hands. So it's just pure cash movement. And so there are a lot of opportunities, an awful incredible amount of opportunities. And there's a lot of money changing hands. So again, I say people want to trade for a myriad of reasons. So as a trader of a specific index, you're getting the benefit of all the news that's happening everywhere and all the stocks, both bullish and bearish. And if you put that together and then come out with your picture for that particular instrument, this one being the S&P 500, collectively S&P, you're going to go down. Straight down? No, we did today. I'll give you that. We did go straight down today. Beautiful trading. Tomorrow, I'm looking for a bounce to flat or a quick bounce up and then another crush. So we actually can have both. What's going to trigger? Keep an eye on moving averages. If this rally gets back up and does kind of nudge against the 200 and it holds, well, then we're done and we're going down. And the initial call would be that eventually we break 43.80. And that could likely be intraday. No more than what we did. That was all pretty, oh, good, we're going up. We pull back a little bit and we go, but no, we did not. I got to tell you, I was long right there. I thought we pull back to this little 4 and we go up and we hit it again. Didn't even get break even. And it went and it came back up and went no, and then just plopped. So there is plenty to trade. And I'm telling you, if you get stuck, you get out of the position. You sell it when it becomes invalid. It was a valid entry if you were looking for another little run up. Just didn't happen. In any case, I'm going to leave it there. Expect the rallies. And the volatility is higher, so will the rallies be, just as the declines are, just not all the way. All right, I'm going to leave it right there, and our next update will be on Sunday, the 24th.